Good morning, everyone. We're running a few minutes behind today, but we'll be getting started in just a minute. I'll be right back. All right, folks, we're back. Still waiting to get started, though. I'm back. Roger will be in a few minutes. How's everybody doing? I'm doing good. Let's Oh, we got a minute. Just get that muted. There we go. Got multiple people talking to my ear. Looks like we are finally starting to come down on the SPY. There we go. Trying to get my screech. There we go. If you're in the trading zone, we took a short right here this morning, right off the VWAP, and we squeezed all the way up. But at the same time, the internals weren't going anywhere. And actually, once we got to about here, the vol just started going down. So we ended up stopping out because we didn't want to sit in it a breakout at this high. But once we printed this hammer candle, we got back in the short, which we're in right now, and gold is dropping like a rock, as you can see in the bottom right hand. Here's all the internals. They're all weak. Tick hasn't actually, it's had more firepower to the downside today. ADD is still negative on the day. Not a huge negative number, but hasn't gone positive. And as you can see, the volt is just went sideways for a little bit, but it's in a pretty strong downturn now. Sometimes the market just floats up, especially when we're at all-time highs, and there's just nothing you can do about it. It's a pretty rare stretch of straight green candles, but you do see it every once in a while. Another couple things. If you look at, this is why I'm leading short today. If you look at RSP, we're below the VWAP, been losing strength. And another one, well, that had a nice little rally. But TLT, still negative on the day. It was coming down towards the VWAP when we got into the short second time. So, of course, administrator. And we're still going. And this is a good lesson right here. It's lunchtime, so it'll be a little weird, but if you're in a trade like we are right now, it's very crucial to watch how we respond to the VWAP. If you're short coming down to the VWAP, never panic if we initially bounce right off of it, because almost always we have slight bounce from algos and stops. But a lot of times, see, I like to cheat. It's like if I'm short the SPY and the QQQ is a little bit weaker, I can see what that's doing first. That got way much further below the view up. This bounce, see that this bounce is fine. Keep watching the internals. No budge in the vault. Actually, I'll just put the full screen on. None of this budged. This is still coming down. Tick is still negative. So I'm not immediately scared out of the short.
Excellent. Anyways, I just wanted to show you guys. I was eating my chicken. Loop was where we get our lunch. They didn't get our order today on time, so I was. I obviously you don't want to watch me eat my chicken, and that's no fun. So I wanted Matt to take a few minutes to show how he is maneuvering the room. And now, as you guys know, I micromanage. I'm sitting, I don't know, maybe 10 feet away from him, maybe less. But we have a lot of fun. I got my hands full usually with the pit, but we're watching exactly the same thing, and we're looking at the exact same thing, and we're commenting to each other all day long on exactly the same thing. So it all works out the way it always has. All right, let's say hello to everybody. We got Kevin, Sifazio, Anukumar, Bill, Jason, Fred, Richard, Dave, Jason, Stephen, or Stefan, excuse me, Stefan. How are you guys? I hope you guys are doing well. And let's start with Zoom room now. Kevin Halffuller, David, Jill, hello there, Stan. Ron, Tara. We got Shannon. Yeah, I thought it would be nice to get his perspective, don't you? I mean, it's very good to get his perspective. David, administrator, David, Stan. See, people are very grateful for your comments, Matt, so you got to do it more often. Darren, Kendall, Chad, Michael. Hey, Michael, how are you? Gonna have a cool lesson today. Don, John, Kea, Moondog is in the house. Hey, Roger. David, Scotty. Hey, there's two of us here. There's Roger Zoom and Roger Scott. Two Rogers.
Oh, yeah, that's me.
Two Rogers is better than one. The Vold is still coming off.
Yep. I'll change it right now.
But are you speaking to yourself?
No, I was speaking to you. I said it.
I can't hear you.
That was me. It was my name, or I was you. The second time, I never changed it because I had to open it from my phone.
Oh, I got it.
I forgot to do it.
Whole lot of. Oh yeah, we got a lot of monitors. This room gets really warm. We got to keep the door open. That's why I keep telling Matt during the webinars, because we don't want people to hear us yelling, but at the same time, it's the weather gets warm in here. Mike Clyde, Ronaldo, Kirk, Vernon, Tony, Fred, Catherine, Debbie, Thelma, Charles. Hey, Charles. Thanks, Bob. I appreciate your work, Bob. 660 people on the morning show and 317 thumbs up. That's what I call a great job. We got to be doing something right, because it's also in the dead of summer. Remember last summer? We were like at 500, low 500s. And then as soon as the fall, right around the election time or going into the election, we got more. But I'm expecting when the fall comes, we'll be around 750, 800. Matt's a smart guy. I wish he spoke more. Yeah, me too. Me too. How do you think I feel, Chris? Tell me about it. Myron, Mike, Flying Road. But no, honestly, the guy's focused like the guy's focused on Trading Zone Live, like a laser zone. SB, how are you? Abe, Bob, W. Brown, Deanna, HG. Hey, HG. Can't place your trade on a platform. Can I do this on? Call different brokers, but Thinkorswim, you should have no problems. E-Trade, you shouldn't have any problems. Hey, Susan, Kyung, Becky, Robert, Wesley, Omar. Hey, Omar, iPhone 183. Oh, my. Yeah, I heard about Hulk Hogan. They always come in threes. You got the Jamal guy, you had Ozzy, and then you have Hulk. Hey, Bob. We already have ceilings in here. It's a lot of heat. It needs constant ventilation. But thanks, Pops. That's something my Pops would say. So thanks, Pops. Jesse, Jeanette says, I didn't get into yesterday's offering because the Bollinger was in the middle, not off the bottom. Can you explain again how much emphasis that goes into that? Quite a lot. Just depends on what the market's doing, too. You got to look at it in relationship to the market, Jeanette. That's one of the best advices I could tell you. And if you need more information, just send me an email and I'll answer it for you. Hey, Keith. Keith says, I'd like to know what he is thinking when you put on a trade. You like the comments. Yeah, I do too. That's what I keep telling him. Post more. Most of the time, when you get commentary in the trading zone and you'll see this is Roger, that means otherwise it's Matt. If you see it's Roger, then so you guys know who's doing the. I would too. I'm on the same page. I want him to do more. iPhone 183. Hello. 80. Hello. Freddie. I appreciate it, Freddie. Yeah, we do it every morning. Heard a rumor about, yeah, there's a rumor, but right now it's just a rumor. He died, Bob. He had a heart attack and he died. Cardiac arrest. It just happened like an hour ago or something like that. Hey, Arnolfo, how are you? Good to see you here. A lot of electronics running in your office, generating heat. Yes.
So on the PDT thing,
yeah,
it's not actually a rumor because I went and looked it up. It is on the docket for voting at the end of the year.
Right. He's right. It's not a rumor. FINRA, it's on the FINRA docket. So it's not a rumor. It's
just hasn't passed yet.
It's a rumor if it's gonna. Yeah, it's a rumor, or if it's just a figure of speech. It's not.
Yeah.
Is it gonna pass? Is it not gonna pass? Yeah. Yes. Thank you, Bill. Thank you. I haven't heard about the. Yeah, it just happened recently. I don't know about leaving SPY, but volume is sure as hell leaving SPY. Yeah, I'm not sharing my screen. I'll share my screen in a second. Richard Hulk Hogan. They come in threes. They always come in threes. I'm telling you. They always come in threes. All right, let me share my screen. Matt, can you let go of the screen so I can share it?
Go.
All right, let go. All right, he let go of the screen. All right. Let me just get rid of this. Kendall says Schwab kicked me off Thinkorswim because I didn't fund it, had to reapply and fund it. Yep, that sounds about right. A lot of people just fund will fund Thinkorswim just so they can have one of our platforms on. Hey, Devin, RJ, Steve, Naples fan, Stefan, good to see you all. Very, very good to see you all. Okay, yeah, they come in threes. The dude from the Cosby Show, what was his name? Jamal something. Nice kid. I was going to say kid. He's not a kid anymore. He's 55 years old or something like that. Sad, very, very sad. Like for nothing. He drowned in I think he was in the Caribbean.
Right.
What do you say?
Yeah, that's the guy that drowned.
Yeah. Sad. Jamal. Yeah, that's Malcolm Jamal Warner. Thank you. Riptide. Yes. Malcolm. That was his name. Yes. They were ambushed. Oh, yes, those police were in Lorraine. Hulk Hogan was a surprise. That is what I did. $100. Costa Rica. Yeah, Costa Rica. Thank you. All right, let's begin. We got a lot to talk about. I'm glad you guys are all here. I wanted to give you a session today, and I wanted to answer some questions. Now, first things first, let's talk a little bit about the market, okay? Steven says, I love to have Matt review all SPY day trades for the education. Well, I'll tell you what, guys.
I do that. This is not published. We go over the trades all the time.
You and I?
No, I do, like personally.
I'm talking about with everybody in the program.
Well, that's what I said. I do review them. I review the trades quite often. We just don't publish it. So that would be easy to do it.
Yes, publish it, please.
Yeah.
Yes. What good is it if they don't? Right. We're on the same page. Will you go over this one? He did, Deanna. He went over it when he first opened the room. He actually did. I was still eating my chicken and I didn't want to talk. I didn't want to be rude. Hey, iPhone blind lady, remember me and the blind lady? I need to talk to support. Having a real hard time. Sorry, iPhone. Call customer service. They'll help you out. Okay. All right. Are you still in, Matt?
Oh, we're still in.
All right.
Remember what I said, everyone, about the VWAP bounce. This is a perfect example.
Yeah, I think what we'll do when we first come in, maybe the first 3-4 minutes when Matt opens the room, to give you an incentive to be here early, he'll go over the last couple of trades. I think that's a good idea, Matt.
Yeah, that's fine.
I mean, why not? It's like you don't. It's not like you have to prepare or anything.
Oh,
That's one thing about Matt and I. The only thing I have to prepare is this every morning. Let me show you. This is where I'm not kidding. I do this because they send out updates to you guys, and they want to know what I'm going to talk about that day. So every morning at like 7 o'clock in the morning, I talk about that, and so you can see what's the best time to initiate income trades, all that stuff. So why not support resist? So that the agenda, and it takes me about a second to do that, and then I just follow this when I do the VIP room. So I know what my lessons are going to be pretty roughly, and I don't really need to prepare on either of this, Matt. So don't overstay your welcome here, Matt, because we're getting to support. Support looks like it's right below where we're at right now. We might have actually bottomed here. So be careful. Be careful. Oh, Volt is still going down. Okay. All right. So let's talk a little bit about this. Now, the first thing is, let me just pull up TC 2000. You guys could see my screen. Yes, you could see my screen. So the first thing I wanted to talk about is, here, let me pull this up here. First thing I wanted to talk about, let me just pull this back here, is a lot of folks want to know, Roger, when is a good time to do debit spreads? Okay. Well, there's two situations. The first question, when is a good time to do credit spreads, and when is a good time to do directional trades? And so let me answer this question for you. Billy says, nice $400 on the SPY. Very nice. Share that with everybody else, Billy. I'll do that. Billy, I take it you like the trading zone. Richie says, just got in. What is going on? What is going to hit the VWAP? Yeah, usually when we talk about the VWAP, we talk about the SPY. Okay, so before I give you all the answers, does anybody want to try? When's a good time to do income strategies, and when's a good time to do directional strategies? Can anybody answer my question?
I can.
And I'm not asking you. Anybody here? Okay, Travis on YouTube says high volatility. Okay, high volatility. Yeah, Travis, I got you. I'm sorry, I'm just looking right now. Yes, high volatility is one of the two. That's one. That's high volatility. Okay, what else? When market is flat. Okay. Yes, when there's not a lot of directional bias, or when we're not expecting a lot of directional bias. You guys got it right. You guys got both of the answers right. The time to do income strategies is, Naples fan has an answer. I have no idea. When volatility is really high, when VIX is above 20, okay? For 20 years, you're the best. Thank you, Billy. I appreciate that. Matt, why don't you go ahead and grab that, and I'll just repost this with everybody. Thank you, sir. I appreciate that. Credit. I'm talking about credit spreads. When is a good time to do directional trades, and when is a good time to do income trades, non-directional trades? Thanks, Maro. I appreciate it. So the answer to your question is under two circumstances. One circumstance is earnings. If earnings fall into one of those two categories, and a lot of times, Bob, when you have earnings, you'll have one of those two cycles. Thanks, Nick. I appreciate it. Very nice of you. You guys got to share all these nice things with everybody else. Post for everyone. Post for everyone. The room is open. I know you guys aren't used to it, but I actually open my room because I'm pretty transparent. I really have nothing to hide. So how do we determine those things? So let's take a look. How do we determine those things? So the first way we can determine those things. First thing, two ways. And I like to try to be as mechanical as possible because you get more objectivity in there. Okay. Here. Why is the bar chart not cooperating with me? Who moved my cheese? What's going on? There we go. Okay. Anytime volatility is below 20 means volatility is not really high. So you don't really have that going for us right now. We don't have the high volatility going for us. Okay. Okay, but as John just said, if volatility is high, how could it be a flat market? You're right, it can't, John. If volatility is high, you can't have a flat market. That's why I said there's two conditions: either low volatility or a flat market. Two extremes. You got it, John? Not You're right. You can't have both of this. You can't have a lot of volatility in a flat market. Okay? You can't have volatility. You can't have that. Okay. So you're absolutely right. You're absolutely right. So it's one or the other. But let me show you something interesting. What if you have a situation? You know how I always look at my 90 10s, and I mean, excuse me, not 90 10s. How I always look at 20-week high, 20-week low. How we do this every day. Well, you can also do it during another way to find out prong B. Prong A is easy. Just look at VIX. Is it above 20 or not? Uh, what does iPhone say? All right. Well, thank you for your feedback, iPhone. I appreciate it. You know, sometimes less is more, iPhone. Sometimes less is more. I'm just giving you information. All right. So, one of the reasons we look at this is to see if there's a lot of directional bias. Now, we've seen some we've seen some directional bias to the upside. I mean, the market's making 52-week high, all-time highs. How can we not, right? But we're hardly seeing anything to the downside. There's very little to the downside right now. Very little action to the downside, which means if we have stocks that are moving directionally but haven't broken out yet, we could start writing bull put spreads underneath them because we have a market that doesn't have a lot of volatility. And if a market's making all-time highs or swing highs, that means it has nice liquidity coming into it. And as we could see here, we have hardly any shorts. Hardly any shorts. So that would be, so I wanted to first answer the question, okay? So the first question is, what are the two time frames to initiate income strategies? Now, let's go back to what who was saying a second ago. It was John Beckham. So just something I wanted to add to your comment. When you do have that high volatility, sometimes you'll have high volatility, John. This doesn't happen often, but sometimes you'll have high volatility. But the market will be doing this. For example, let's say during earnings, let's say right now, and this is just a hypothetical. I'm making this up as I'm going along, but I want to illustrate a point. Let's say that this week and next week, tech stocks do really well, right? And then chip stocks come out and they do bad. I have no reason to say this. I'm just illustrating a point. So you'll have a market that goes up and then you'll have a market that comes down. It doesn't happen very often, but you can have a situation where it happens. When that happens, John, that's when you start looking at iron condors. That's when you have when you do a bull put spread and a bear call spread. I'm going to explain all these things to you guys in a few minutes. But so if you have both, if you have high volatility, and at the same time, in addition to high volatility, you have no range, which doesn't happen often. That's the prime time to do iron condors. Okay, just wanted to add to that because you brought up a good point. And this is why it's good to have interaction. Sometimes somebody will say something and oh, I forgot this, or I forgot that. And people bring up good points. And as I said, I really don't have anything to hide. Oh, you got out of that position. Good, 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 good. I was curious if you were still holding it. Good.
Oh, we got back in.
Oh, we're short again now.
Yep.
Oy vey. He's a brave. Well, what's the Volt doing? Near lows. Be careful right now because it's lunchtime. We may just bounce back right now. Be careful. Just be careful here, Matt, because we can be entering a choppy phase, and we can be sitting right here. We can be sitting right here between the VWAP and this area for the next 2 hours. So just be careful. Be careful. Okay. Okay, so what I wanted to, yeah, everything's acting strange today because it's earnings. It's not news driven market, but earnings, and earnings can really move. So we have to be extra careful, and we have to give our positions extra space to move. Yep, you're right, Travis. Still dumping, or at least looks like it's dumping. All right, so let's go back to what I was talking about. So I want to talk a little bit about implied volatility. Okay. Let me ask you guys an interesting question. I want to ask you guys an interesting question. This would be a good time, Matt, maybe around here to possibly start looking at getting out.
Yep.
Yeah. Yeah. Definitely. Oh, yeah. Definitely. 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 Sorry, folks. I'm trying to do three things, three or four things at one time here. All right. Seems to be a good job. Seems to be working out okay so far. Good job, Matt. Great job. Great job on that one. Great job. Great job. I love that Trading Zone Live. So much fun. All right. Okay. Shannon says you're an excellent multitasker. Well, I need to have the right assistance. When I have the assistance, it makes it easier. It's hard doing it by myself. Determined not giving up really help with lessons. Good iPhone. Good, 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 good. Good, Sean. Good to see that. Okay, so I want to ask you guys a question. Please help me out here. What percentage do you think, so I want to show you something, okay? I'm having so much fun today with all of you. I hope you all feel the same way. Matt and I love doing this. So you guys could see this pie, right? On my Picasso drawing, my pie right here. Okay. You see it, right? You can't see it, Mark? You guys could see it, right? I just drew a
On
pie.
your camera.
Hmm?
It's not on the screen, folks. It's on his camera.
It's on my camera. It's on my camera. Look at my camera. It doesn't have to be big. I just want you to see the pieces of the pie. Yes, very small. Here, look. Do you see it now? Instead of my face, do you see a pie? It's not readable. There's nothing to read. I just want you to see a pie. Okay, okay. You see this pie? Okay. See how you have each piece? Okay, pizza. Yes, that's pizza pie. I'll go with it, Vladimir. Whatever you want to go see it. No, no, it's there's a pie here, like a pie. Okay, so imagine you're at a party, okay, and there's a pizza or a pie or a pizza pie, whatever you wanted to call it. Pizza pie in New York. There you go. Pie chart, and you're trying to decide, right? It's not cut up. It's not cut up yet. So it's just a, a round circle, and you're about to start slicing pieces, okay? And you've got, say 5, 6 people at your house that are going to eat the pizza, okay? So you got a guy that weighs 300 pounds, and next to him you got a little child who weighs 50 pounds. So you're like, well, and the child's like, yeah, I already ate like an hour ago, and the 300-pound guy's like, I'm hungry. Right? And then there's a gal that weighs 100 pounds, whatever. You're probably going to look at the people. You're going to be like, well, look, we only got 6 slices. So, I mean, the kid gets a little slice. The 300-pound guy gets the biggest slice, right? You know what I'm talking about, right? You don't make them all equal. You make the slices based on who's going to be eating those slices, especially if you're got like 3 or 4 people and like, your grandparents come over and, it's family. So you don't have to like be all politically correct. You could just slice it the way you want to slice it. Right. But you guys get my point. The point is what I'm trying to make here. Right. So implied volatility works the same way. You see, when you look at an option, you're looking at this. So let's say I'm looking at a $5 option. That $5 option $5 will be spread out amongst the pie. You'll have $1 here, another $1 here, maybe $2 on this big slice right here, another $1.50, but they'll make up $5. Okay, okay. If I take the Black Skulls model or I take an option pricing model, it'll give me it'll give me the value of every piece of the pie, okay? Except one, implied volatility, okay? All right. So what good is side note here. So what good is having an option pricing model if implied volatility is always the unknown and it's always jumping up and down? It's useless, right? But that's side note, sidebar. So you're not that big of a guy, Bob. You're a pretty normal sized guy. My point is this. All of these factors, all of these numbers will be fixed. They don't change. They change based on one factor, the implied volatility. And that's a big question mark. You got a big question mark there. And we don't know what the answer is going to be, and it constantly changes. So, well, Roger, okay, it changes. Big deal. You're talking a lot about nothing. Basically, so you're saying that an option's $4 and the implied volatility, which is like, maybe 1/5 of it is going to go up $1. That's not what I'm saying. Let me tell you what I'm saying. Listen and listen good. I'm teaching you some good stuff here, okay? 30% on the SPY short. Good, Brad. Get that from YouTube, Matt. That's good. I like that. Okay. So in the crash of the 80s, in the October 29th crash, when the stock market opened the next day, okay, the stock market stopped crashing. The prices were just staying near their levels, okay? The option prices quadrupled in value without the market doing anything. What? I'm going to repeat that again. The day after the crash, okay, the stocks just opened flat, like just where they closed the day of the crash. The options quadrupled in price. Now, do you understand the impact of implied volatility on the options? No, market makers didn't get greedy. Implied volatility. All right. So, do you guys now understand? Do you guys understand the difference that implied volatility can have on the price of the option? It can swallow this entire pie whole 5 times. I'm being a little dramatic, but you get what I'm saying. To give you another example, do you remember the last time? And again, I'm not trying to get political, but do you remember the whole thing with when we had that little hiccup in the market when Trump was thinking about firing Powell the first time? Like, I don't remember how many months ago was that, Matt? Like 2 months ago, 3 months ago?
Yeah. Well,
Time gets away from me. But remember, the market did a little skid. We were all scared. We were all worried. Well, options on that usually cost $2 to $3 on the SPY jumped up to about $8 to $9. Do you guys remember that? Do you guys remember that? Think about what I'm saying right now. So, options can literally, implied volatility can cause your option to sink, and implied volatility can completely swell up your option. So, when somebody asks you how important is implied volatility to the option, you need to keep an eye on it. Why is that important? Try to find a stock when you're doing income trades that have high volatility to begin with. That way, they don't have much more to go down. You don't want to find stock that goes up and down in volatility. You want to find a stock that constantly has high volatility so that the options just go from high volatility to excess volatility. Okay? Okay. Market makers' move, Brett, is caused by uncertainty about which way market flow is going. They want to make money from both sides, but they are not confident on the direction. So they spread it out till they have certainty and make money on both sides. That's usually what happens. Okay? No problem, John. So I wanted you to understand. Don't try. So what? How does that? What does that mean to you practically? Try not to do income trades on stocks that have been really calm for a while. You want to do the ones that are already moving. Now, wait a minute, Roger. What you just said is completely contradictory how most people do income trades. It completely is. Most folks, remember what most folks want to do. They want to get as far away from the fire. They want to take 5 cents instead of taking 50 cents. But if they take 50 cents, they're going to be right up here. Okay? And Kumar, I'm going to show several examples. I'm going to do a class after this, but you're going to have to be in the Zoom room. Matt's going to post you a link. Everything I'm saying will be summarized, exemplified, showed with examples, and I may even give you a red meat within the next 20 minutes if you guys behave yourselves. So, what was I talking about? I lost my train of thought just now. What was I talking about? Matt, what was I just saying?
Talking about options, right? The right stocks for income trades with high volatility
Oh,
that
yeah,
goes
yeah,
to
yeah.
higher
Now I remember
volatility
now what I
for
wanted to
excess.
say. Yeah. I remember. So what you will find most income traders do, professional income traders, they try to get very little premium and go far out of the money. Well, the problem with that is if the stock comes down, you're going to get hurt walking up the stairs and falling down because they don't know how to trade, Bob. Okay? So no, you want to do income trades on stocks that are moving. You do, Mark. You don't want to do on stock. Remember, the longer a stock stands still, the higher the odds it's going to start moving. The longer a stock has been moving, the higher the odds it's going to start standing still. If you pick a stock, uh, if are you going short or are you taking profit?
Went short again.
Okay, all right. So you want to trade stocks that are in motion. My way of trading income is very, very different from 99.9% of the traders who trade income. Let me give you a practical example. Okay. Here's AVGO. Most income traders will do a spread over here and they'll take a quarter. Okay. Okay. Their risk will be $3, but they'll take a quarter. Now, what are the odds of this coming down to here? 5% maybe? Here's the problem though. One time it will come here and you'll take a quarter and you're going to lose $3. So you're going to take a 1,000% loss. I do my income trades in the direction of the trend right below price action. So I'll take $1 in my pocket for $2 risk, not a quarter for $3 risk. Do you guys understand what I'm saying? So here's a perfect example. We did a spread here. Matt, how much did we take in? $1.10?
Yep.
What was our risk?
250. So a
250.
dollar.
Hmm?
Dollar 250 total.
Yeah, 250 total minus what we took in. So
Right.
about a little over about 60%. When you take, yeah, I always try to go for 50-50. Most income traders try to go for 100 to 10 to 1. 10 to 1. Okay? It works all the time till it doesn't. The problem is you're going to have to be right 12 times to make up that one loss. I try to go from roughly, it's usually 60%, 40%, but I aim for 50%. And my win rate is, what's our win rate, Matt? Do you know?
On weekly cash flow?
Yeah, just out of curiosity. Let's look what our win rate is. I would be careful going short here, Matt. If we go above the VWAP, we could be building a base and this thing could be taking us higher. Yeah, let me know what the
80%.
What is it?
80.
80%. Okay, thank you. So my win rate is 80%. 80%, which is probably about as high as the guys who are doing it over here. But I'm taking 50% of the income. So in this case, I took $1.10, right? Let's say this stock, hypothetically speaking, comes down all the way down here. Okay? Okay, I'll lose $2.50 minus 210. I'll lose $1.40. But I didn't take in a quarter and risk $3. See what do you see the difference? Big difference. So if I'm right 80% of the time and I'm taking 50% of the spread, I'm constantly making money. Yeah, my profit factor is much higher and my win rate is about as high. So let me explain to you what I do and how I trade income, okay? All right? And then I'm going to I'm talking about credit spreads right now. So would I do a credit spread? I would do a credit spread on a stock like this, and I would pick the bottom, and I would do a credit spread somewhere right in this area right here. Okay? And with the intention of the stock over the next couple of weeks moving up and me keeping some of that money. Now, on the fair chance that it goes against me, my worst case scenario, and I'm 80% right based on on the portfolio. Worst case scenario, I'll take a 50% loss. So think about this, guys. Do you guys like trading systems where you make 50% loss when you're wrong and you have an 80% win rate? Your losers are maxed at 50%, give or take 50%, and your win rate is 80%. Does that sound pretty good? That's what we've been getting using my methodology versus 90% win rate and losing and having to win 10 to 20 times every time you take a loss. I can make my loss back in half of a trade, one trade. And by the way, that's what we've been doing. So when I originally started the program, I did it like the old school guys. And I'll talk about this in the webinar in a minute. If you guys haven't seen this, the webinar, Anu Kumar will show you how I switched from going one way to another. Okay, now let's do another lesson. What's the implied volatility, directional bias? So how much do we know how much the stock may go up? Usually about 1.5 standard deviation. I give the signals. I monitor it. I don't want a strong uptrend. I want a grinder. I'm not looking for a strong uptrend. I'm looking for a grind. Grind is the best kind of stock. Hold on, let me just check Palantir real quick. Yeah, it's holding on pretty good. It's above the VWAP all day. So I just want a grinder like this that keeps hitting the 15-day or the 8-day, whichever it keeps hitting. Okay. Now let me teach you something else. Are you guys getting some value out of this? No, I never do zero DT income trades. I probably should, but I don't. I've never done any of those. It's just not my cup of tea. The reason for that, SJ, is I've been told that I'm one of the best directional traders in the world. What do I need to mess with that for? My win rate is 94% on directional trades when I'm really focused. What do I need to worry about income trades for? It just doesn't make any sense to me. All right. So now what's the other important factor? And you guys I bet you most of you are going to miss this. And this is the problem that Matt and I face almost every time we want to put these trades on. So, Neuralink chip in my head to soak up. There you go, David. So let's talk a little bit about this. What's implied volatility, directional bias, stocks that are moving? What's a huge factor that plays in a role that makes us give up 3/4 of every trades we want to put on here? Can anybody tell me? Not news. No. Good answer. Not emotions. I have no emotions. Jeanette, when it comes to markets, I have zero emotions. And Matt probably has negative emotions. Not algos, not mind traps, not risk. No, not getting chance of assignment. No. Not ATR, out too early. Nope. None of you guys got it right. This is good. Usually they get it right. Volatility, no, we already talked about volatility. Increasing volatility, no, I wouldn't care less. Remember, I'm going to make 50% or lose 50%. I could sleep at night. Volume, wait, Marina, volume in what? Somebody actually said something. No, volume. Volume in what? Marina, don't leave me hanging. Fred says momentum. Joe says ATR. Brent says direction. No, no. You guys, no, no. Money flow. I don't even know what money flow is. VWAP. No, no. Implied volatility. No, no. No, not price action. Nope. Liquidity, volume. Let's expand on that. Not expiration of options. Volume and liquidity on what? Volume and liquidity on what? You guys keep. You're like circling it, but you don't want to say it. How about liquidity? How about liquidity? Too much coffee. Okay. How about liquidity on the options? Let me explain. Let me explain. Remember, we're doing two sides. Well, in fairness, it is on the underlying because options on the option volume is usually 100 times less than or 10 times less than the volume on the underlying. But sometimes that's just not the case. Sometimes I won't have a very popular stock, but the option will be crazy liquid. So the options. Let me explain. Let me explain. Remember something. We're doing two sides. We're doing two sides. Two sides. Okay? Two sides. So you got a spread on one side and you got a spread on the other side. If you have an option, just the spread between the liquidity on the option. I want the option to have really tight spreads. When I say really tight spreads, I mean super spreads. I want it to be A+ spreads. A lot of times we'll find a beautiful stock, great liquidity on the underlying, and the options have a spread of 10 cents on each side, which means if I do two sides, I'm going to get taken for about 15 cents. I can't afford that. So we need really high liquidity. We need stocks that are just hyper high liquidity because otherwise we're not going to be able to do the option. I would say 70% of the trades we want to do, we can't do because of liquidity. Would you agree, Matt?
Yep.
Two sides. See, you don't have that problem when you're doing one side, but when you have two sides, you need the ultra tight liquidity, the 1-2 penny spreads, the 3 penny spreads, not the 15, 10-cent spreads. If you're just buying an option, you can just work the order. But think about this. Let's say I'm taking $1. Okay. I don't want 15 cents of that to be eaten up. It's too much. Too much. Too much. You won't hear these things from people who don't really trade this stuff. I'm giving you all the little stuff that comes into play all the time. Ryan says, I find that condition. Why is the post for everybody, guys, so everybody can participate. Ryan said, I find that condition often, bad spreads. Yeah, yeah. And here's the thing. You got to be really, really, really nitpicky. So to give you an example, let's say I'm looking for stocks for the pit, for directional trades, not income, okay? And I'll look at 5 stocks. Half of those, maybe out of 10, let's say 7 out of 10 will work. In this case, maybe 2 out of 10 will work. So not good spreads, great spreads. It depends on how much you're taking in. 10 cents on a 5, if you're taking in $2.50, 10 cents is not that bad. But it just depends. It depends on how much you're taking in. I've encountered options with too wide spreads that hobbled an otherwise profitable close. Yep. Yep. Yeah, I'm telling you. 8 out of 10 ideas I get blocked. Nope, not liquid enough. Yeah, I'm looking for like the most liquid stocks. So a lot of times you guys may be wondering, why is Roger not giving us a trade? Half the time he's not allowing me to do the trade because the options are just not that liquid. He's like, nope, can't do it. Matt, what about this one? Nope, can't do it. What about this? Nope, can't do it. 8 out of 10 times. 8 out of 10 times. So it has to be a perfect combination. It has to be the perfect combination of liquidity, price, and movement. Now, folks, please make your way into the please make your way into the Zoom room. I am going to do a class right now, and let me explain to you. Let me give you a little background on this class. Okay, I usually never do this, but I'm going to give you a little background on this class. Okay, so we launched this program originally. And So can you tell the liquidity by tight spread? Yeah, let me show you. See this? That's a tight spread. A few pennies, like a penny or two. That's a tight spread, like that. Like these are the kind of spreads you want. Like really liquid, like Nvidia liquid, like really liquid, like these kind of spreads. Really tight spreads. Like if somebody was to ask you, "Can I get this filled?" You'd be like butter. Those kind of spreads. Otherwise, you're going to get screwed. Richard says, "I like what you see with SPY." Thank you, Richard. Thank you. Thank you. All right. So let me give you a little background. I think you will appreciate this. I think you'll appreciate this story. And everybody in YouTube, please make your way into the Zoom room. So when I originally launched this program, this is going to be very interesting to you because now you have a little background. So let me fill you in so you guys understand where this is all coming from, okay? So I launched this program. I launched it and I was doing it like everybody else because people were like, "Roger, you need an income program. All your programs are directional. There's a lot of people who like income. You should do an income program." It was kind of forced down my gut. So I'm like, "All right, I'll do it." And I was trading it. And one day I got a note from Brian, who was our tech guy, volunteer tech guy. And Brian's like, "Roger, I have this trade that's really going against us." And I looked at the trade. I'm like, "Oh shit, if he loses on this trade, he's going to lose like $4 or $3." And he took in like 10 cents. And I started feeling really nervous. And it was my day off. I took a day off. I don't remember why, but I took a day off. So, and I was like, "You know what? I don't like this." So the next week I came to the office, and I hope you guys are listening to me. And we have a really cool copywriter. And I said, "Look, I'm changing this program. This is what I was doing before, and this is what I'm doing now." And he's like, "Okay, well, why don't you do this? Why don't you trade for a few months your new way, and I'll make the promo go from the first wave to the second wave so people can, so the promo will be literally about how you made this change and the impact that you had this change and how much money you're making more as a result of this change." So what this program is, it's not one of those flashy presentations that's going to show you how we made a gazillion dollars. What it's going to do is it's going to literally show you what we were doing before, what we're doing now, and how that made a huge change to our nervous system and to the bottom line. Okay. So I hope that everybody who's on, YouTube would have enough attention span to make their way into the Zoom room. Please, let me do this. Please make your way into the Zoom room. All right. Nothing for you to do. You are already in the Zoom room. So this is why this presentation is very, very interesting because it takes what I used to do before and compares it to what I'm doing now. I'm not sure, Richard. I mean, Peter, I'm not sure. I don't know. I don't know. So with that in mind, watch. It's not very long. It's very short, but it's very important. It'll show you the difference, which is really, really cool and powerful. So please pay attention. And if you stick around till the end, and if you behave yourself, I'll give you an income trade. How about that? I'll find, not only will I give you one, I'll find one and give you one together. All right. So stick around. Don't go anywhere. We're going to have some fun. All of us except Matt, who's sweating the S&P trade he's in right now.
No sweat.
Huh?
I'm not sweating.
I'm playing around. All right, guys, let's do this. Profits.